So stop loss, just in the name, sounds good, doesn't it? It's going to hopefully reduce our stop losses, which we want, right? So let's figure out, well, what is this really all about and how do we use it? So a stop loss is actually a trading order, an order that you place. So really the definition of it is an order you put in place with your broker, your online broker typically, to automatically exit a trade if it goes against you by a certain amount. So let's think through that a little bit here. So you've bought something, and at the same time you're going to put in a stop loss that at a certain level, if the trade goes against you, it starts going down in price, you'll automatically sell at that point. And you can determine, how far down you want to do that. And we have a lesson on that as far as how to actually set these things. But basically, you're thinking about it's an automatic exit of a trade that you're setting up ahead of time. So the stop loss you input is an amount below the current market price. What people are buying at, what you might be buying at, especially if you're putting in a market order where you're buying at market price, for example. And you place at the same time you place your buy order. So at the same time you're buying, you're putting in a stop loss that only gets executed and automatically if certain conditions are met. And why are you doing this? It's part of the overall plan, right? It's part of the plan to minimize losses, is what it is. Because sometimes these things can turn on you quickly, and so you want to have something that's automated that can help you with that and really lock in either profits, if you've got a lot of profit off a trade and you want to kind of lock those in a little bit with a stop loss order, or to minimize losses right off the get-go, but you're placing at the same time that you place your buy order. So if we look at this graphic here, it's from Financial Express, kind of a nice graphic. You can see where the person's watching a trend on the left there that's going downward, but then it turns around and he's looking at a place where he's first pointing like, okay, that's where I want to really kind of make sure, I think that's going to settle, and I want to stop my losses there. And then he buys, right? So he waits for the trend to develop, and that's a good thing, waiting for the security and the trend. The trend is your friend to develop, and is buying there. And then is placing a stop loss order at that point just below the buy order. So the idea is if he buys there and it goes down pretty quickly, he's going to minimize the losses by having that stop loss order in. As it turns out in this graphic, the order keeps going up, the security keeps going up in the green there. And then if he leaves that stop loss order in place, it would come back down. And let's say if the person hasn't sold by the time on the far right there, then the stop loss order would be automatically executed. And you'd still have a loss in this example. So really what you'd want to do, and you can do, is you can actually move your stop losses as you make more profits. Or as you have other rules and things around that once you reach your certain targets as far as profit maximization target, you might have sold before your stop loss order is executed. Or you adjust your stop loss order upwards, which you can do. We'll talk about that a little bit later, but you can adjust that upwards so that your stop loss moves kind of with as your security moves up in price too. So you're locking in some profits that way. And when we get into the market order type section, well, there's another thing called a stop limit order, very similar to stop loss, and we'll get into that at that point here later. We have a whole section just on how to trade securities on the different types of orders, from market orders to short to stop loss, stop limit, all that kind of stuff. So we'll be learning about that. But the key thing you want to take away from here now is that I'm able to minimize my losses at the front end, but I can also adjust it to maximize my profits on the back end by adjusting the stop loss order up. So you might have some questions. There are some frequently asked questions or FAQs around stop loss orders. So first, a common question is, how often should I use a stop loss? You should really use it every time. I mean, every time. The whole idea of trading is you're trying to make profits and all that, and you don't want to have your losses go down on something unexpected happen, have your losses all of a sudden go way through the floor right after you buy something. So putting in a stop loss, even if it's never executed, is always a good idea. You should really use it every time. The exception on that might be a buy and hold, or a long time hold investor. Somebody's holding for a year or more, then they might want to, their whole idea is that they're going to go through long down periods and have that security come back up, is the idea, by basically using time on their side. But if we're actively trading, we don't have that kind of time. We don't want to hold something for 2-3 years if you're an active trader. But a buy and hold person could get away with not using a stop loss. But if you're an active trader, no, use it every time. Do I have to use it? Can I just sell when I feel like it? Just have a feeling, or use something like an indicator and just feel like it, and have it not be automatic. And the answer is yes, you have to use it. You have to use it every time, and yes, you have to use it. And the reason for that is the stop loss, putting that in place, takes emotion out of it. Sometimes we get attached to a security, we're in denial, we think it's going to come back, and it doesn't. And then we sell at a deeper loss than we maybe wanted to or intended to. And then we figure out that even though we've had some profitable trades, we've had some real bad stinker trades because we didn't put a stop loss in place. It takes timing out of it, right? It's time to always, it takes the timing as far as time you spend always watching it. Because it's automated, you don't have to be watching your security constantly all day long during a trading day. You can just put the stop loss in there, and then you can adjust it later as, let's say, if hopefully you're riding the trend and you're banking in some big profits, you can adjust upwards at that point. And it helps you to exit out fast out of fast big drops, right? Where something unexpected happens and all of a sudden the security is really dropping in price. You're not watching it constantly. It's hard to do that. So so the stop loss will just automatically take care of that order and sell and either minimize your losses or lock in a gain. And again, it's all part of your plan, right? It's all part of the plan, the trading plan that you have. And lastly, a frequently asked question is, I'm worried that my stops will keep getting exercised all the time, particularly in a volatile market where there might be whipsaws and things where it's up and down, and they're always being executed. And my trade never really has much, time to really develop. And that's okay. That can happen. Just adjust your stop levels to account for that. Maybe you need to set a deeper loss level and be comfortable with that and in a trading a very volatile security. If you find you're not comfortable with that, then you might want to look at securities that are less volatile in terms of going up and down, and maybe take a look at that trading indicator section around volatility. Again, this would be a good time to review that if you're still wondering about where you might fit with that.